Hey guys, it's Brad with WDGANtunnel.com. Hey, I think you guys are gonna like this one. This is kind of a tough one to take on. I'm not excited about shooting this at all because nobody wants to listen to this. That's why. So I want you to and I want you to zoom in on this because I'm gonna leave this on the big screen. I have to do it this way. I know it's better on the small screen, but I want you guys to kind of get the feel of this and show you what you're up against. This is December 2025 corn. I'm going to leave it like this. I think that's hang on one second. Okay, I think that's good. You're not going to see this great. I want you to pay attention to something. Here, I'm going to change this line over to this way, okay? And I want you to think about something is I'm going to give you guys, yeah, I need to bring this in here like this, okay? All right. I'm not going to move it anymore. Okay, so this is the December 2025 contract. This gets back into October 2022, and I know this contract's weaker, you know, the farther out back here you get, because obviously you've got more time and corn's not going to trade as far. But let's just look at what's going on in here. I want you to look at this area in November 28th to 2022. I want you to notice here around December 30th. Look at what started happening even into the 9th, okay? The 9th of January in 2023 is it really started letting go when we ran down to this bottom in May. And if you think about that, that's about 120 days. Let's just call it 100, okay? 100 days. And I'll tell you why, because when we get over here, it's 100. And so whether it goes 150 or 100, let's just look at this as 100 days down, okay? And I want you to look at in here when we got into December 4th, I want you to notice a big slide started happening around the 2nd and into the 5th of January. So notice here, 2nd and 5th of January, not good. Over here, we had support into December a little bit, and then it started falling off. And by January, you can really see it's starting to fall apart. And I bring this into this because January 10th, it gapped down here, and on the 2nd and 3rd of January, it really started taking some downtrend into February. This again is May 19th, but again, look at this, March 7th and April. A lot of down in there. We had some falling off here, which is fine, but this goes into May late. Sometimes you don't get into May. You get into just the February 29th, which is March 5th around there. So I want you guys to concentrate as you zoom in here. Look, we got 515s, 510s, then it drops down to 499, okay, and into the May high here. And then we come into this winter rally here, and we got up to 460. So that's a pretty good 499 to 460. I mean, there's some cents in here, 10 cents into here, 15 cents into the summer. So, I mean, we're hoping that this doesn't get down too low, like maybe $4. And then we're all hoping for the spring back into summer at the, we're not going to get $5 because it's down lower, but like we've seen 460. So we know it could happen around 480, I think, because you got 12 cents down off the top here. 12 cents was back here. So, I mean, the highest we could really see this contract trade, I think, is 470s. I'm going to say 470s. I got 40, but I think it's realistic. It's around 470s, but we've seen 460. So everybody wants this $5 corn out here, and I get it. The problem is if these two events happen here, January 2nd, in January over here, 2023, and 2024, the low in here, this puts you really fighting way down here. And it gets you hard to think that you're going to get up to 450 corn again or 430. And we have a chance of 480, but that's fine. Notice, guys, we've taken some corn here on ownership, okay, for 2025. You guys have protected some on the downside in here, and we'll go into May at the latest, April, May, okay, which I think it comes in around February 20th to March 10th is the bottom. And so you guys have moved in these different positions in here a little bit, and we're going to play the downside here, and then we're going to go sell more if we get the upside. If we don't get this upside into the 460s and 480s, you guys have done some selling. You've protected some downside on the board of trade with puts on July contracts. And I want you to think about something is this time frame in here is about 185 days, okay? Bottom to bottom, okay? 185 days. And I'm going to find a bottom out here of September to February is 180 days. So round trip, I'm going to go 180 and we're 100 to the top, okay? So to harvest, and I say this because October 28th, usually we get into a bottom. So we're not going to go clear out into December harvest because usually the bottoms come in. So guys, if you think about it, we're around 200 days to harvest, okay? If corn goes up 100 days and it goes down 100 days, that leaves you having to get corn going up here, which it may, and then we get into this 480 by April, May, June, and we do get that 480, okay? And so as this moves up, we would keep selling more to get to the 480 on December 2025, and that's fine because we would have some sold at the 450s, and then we get up into 80s and 90s and sell more, and then at some point in time here, we would protect the downside. Now, if you've sold some and you're playing the downside here, you're playing the downside because of these areas. January 2nd here, and January in this area. And we see, and remember this contract was older then, but we see a 60 to 70 cent downside here. So if you're playing the shorter, you sold some already, it's because you got 40 to 60 cents in here. And again, this is a summer high, May, right, June. And then she went clear down to harvest here into August, and that happened May 2024. And then this contract just kept going down after that, okay? So, guys, when you think about it, our spreads on corn have been around $1, okay? We've hit floors in here. There's 80 cents. So the most I think we get to is 480s in there. We had bottoms coming down here. If we take on bigger bottoms on this contract, it's hard to get back to 480. You've owned some here. We're going to sell more, add to it. But I think, guys, we've seen 480 corn. You risk into harvest getting down into these 480s and 450s, because we've seen 380 corn already. So I think it's safe to say that harvest, guys, look at this. If we took on a bottom of 30 cents into this area, that gets us, if we took on 30 cents down from our bottoms, that gets us into 390s on delivery. Okay, here's the problem. If we go see $4 on this contract now, we're going to go down again, and it'll be another 30 cents, and that does get you down into harvest at the 350s and 360s on this contract. So there could be, if this thing swings lower and it happens like I think we hit 390, we ricochet back up on this contract, you got to understand there's 30 cents less, whatever the bottom is here, and this contract could go down to 370, 380. And here's the problem is September contract could go even lower to 350 and 330s. That's how we could get to 330 and 350 corn, is because of these bottoms 30 cents lower on these contracts. So again, we're reiterating, everybody wants this 499 back here. We've seen 460, but these have all stepped down. So it's highly unlikely you'd see 499. You're going to be down into 480s, 470s. That's the highest. We've already seen 460s on this contract. Let's hope we don't get a big bottom way down. I mean, like, what I want corn to do is keep driving up right now and get to 480. Okay. And we take the shorts off on July, get out of the puts, right? That's what could happen. But this is why I don't think it happens, because of this 2023 and this. I think there's more downside. They're wanting your corn now in July. It's pushing it up. But eventually when we get into this January area and later, as we take the downside on all the contracts, and then it's going to be how low do we go? And if I'm wrong, that's fine. We're selling more at the 480s, and we're going to sell hard, and we're going to own futures, and we're going to own the downside into harvest and pick up 30 cents. So either way we win. I think this number in here isn't that 450 I told you after in that October area of the 15th right there before this drop. I think that was you guys did sell some. You sold some at 450. Some guys have caught the 444s again. That came in late with me. Some of you guys got the 450s in this area again. That's fine. Let's go get this 480. You guys aren't sold out a lot. We got a little downside protection here. We know that 350 floor is out there, 380s into harvest. Let's think about what we're doing here. This is not a year where you're making big money on the spreads. You're making about 60 to 70 cents up and down. And it's because the downside, I'll show you guys right here, okay, is 70 cents. So we could take on a 70-cent downside. Look it up here on this contract. We took on 80 cents. So, I mean, 80 cents somewhere, if it happens, I mean, and this could be after the high. I mean, 380 corn on December could happen. That means your front contracts are coming in at 350, 360. You get it? Because up here, depending on how high you get into the summer, that still gets you down to 380 into the lows on this contract, and your front contracts will be at 350, 360. I don't think we see 320 corn. I don't think there's enough downside to corn right now, and it's because we do have some good support here, and I think too it's because July and your front months are getting a little bit higher here, so it's going to make it hard to get down to 320 corn at harvest or 330 anywhere into that September. So, guys, I hope you got something on this. Not a lot of big money to be made, a lot of protection here at the 350s and getting corn sold at the 370s and 380s. Guys, I'm going to tell you this. I think the key here is watching your basis on corn, getting stuff sold, and staying away from low basis on corn. I think that's the big takeaway. We got 70-cent spreads, but try to capture 10, 20, 30 cents on your basis, guys. When you look back in the rearview mirror, doing some good marketing, I mean, you're still going to look like a hero, because nobody's going to book 350 corn. Nobody's booking 380 corn. I get it. But 450s and 470s and 80s, those are numbers we want. And if you get some of those numbers, babysit your basis, you'll get to delivery, own some puts. Maybe you'll get to 480, 490 corn. I mean, if you're a hero and you're a risk taker, yeah, you're going to get to $5, but that's going to be hard to do for a lot of you guys because you're not going to put it up on the board that heavy. Guys, thank you. I hope this served you well. Like I said, pay attention to these areas. It was into the 18th, or the big slide happened on the 6th of December, so we're not that many days out. Remember, these holidays trading screws stuff up. And the second happened in here on these contracts. So, I mean, I'm really hoping to get this big pull like 10th, the 15th. That's what I want to see. I want to see corn drop off a cliff on July contracts and December around the 10th. A lot of volatility in there with non-trade days pushing stuff back and forth. But let's look at the clear picture. If you sold some out, run with it. And if your downside protection's put in on some puts, you're an animal because you're marketing good. And if we get to the 480s, fine, we're going to sell like hotcakes into the summer high. If we can get it, let's all pray for 470, 480 corn in June, July. When we get to these bottoms too, I can project when that's going to happen on summer pretty easy. So we'll try to get you the high in there too. Thanks.